Let's go outside of tech before we get out of this A block. Look at the home builders today. DR, KB, Pulte, Toll. Evercore has downgraded that group. They believe margins must bottom before the stocks can re-rate. We do not believe that this will materialize in the next several months. Take a look at that move in DHI, down 5%. You can cycle through the others. I'm sure that must tell a similar story, right? KB, Pulte, Toll. Can we look at those, guys? I bring this up in part because Jenny has made a move in Millrose Properties. Right. You bought it, MRP. What's the deal with this name?
So it's really interesting. It was spun off of Lennar in February, and it's a complex structure and a complex company, but the best, most basic way to think about it is a land bank. And so what Lennar did was basically say, hey, we've got a really high risk, high reward part of our business with high growth. And then we've got this other part that's, asset heavy, slow growth, cash flow oriented. Those are two distinctly separate kinds of businesses. So let's spin off the land into this land bank called Millrose. So where you stand is they've got thousands of acres of land covered in 10 different states, very well diversified. It's got a 9% dividend yield. The objective of the company is to pay out all of their earnings, all of their funds from operations into the dividend. So 9% growing. They're off to a great start, actually increased their distribution after their second quarter call a few months ago. Next one's coming up in a few weeks. Very, very well managed. It's a weird management structure where there's an external management by Kennedy Lewis, but we spent a lot of time on the phone with the management team getting comfortable with that. I think that external structure will keep a little bit of a valuation cap on this. But basically, what happens is they give Lennar and anyone else who wants to buy their land an option. So Lennar can say, hey, we know that it's cyclically not favorable to build right now, but we also know that it's a cyclical business and we're going to want to build later, 3 years, 5 years, 10 years. So we're going to pay you a small option in the interim. And then one day, we're going to take down that land when we're ready to build. So Millrose is able to really manage their portfolio because they're always getting this cash flow. It's a cool story. If you want to buy it, I would say use a limit so you don't run the shares up, do your own homework, and go online and understand the complexity of that structure. There's no way I can do justice to it, but a really high quality company.
Okay, a week ago or so, you teased the fact that you were buying a staple name, but you didn't want to reveal it then because you were still buying it, I think, right? Well, now you've sized the position to where you want it.
Yep.
It's Kimberly-Clark. It's KMB, 52-week low today with a 4.2% dividend yield.
Okay, so this is not like, oh, Jenny has some huge edge or wild insight that no one else does. Kimberly-Clark, Kleenex, Huggies, Cottonelle, Scott's, the most consumer staple of all consumer staples names. It's trading at 16.5 times earnings, a 4.2% yield. They really got rid of their international family care and professional business, and I think analysts haven't fully accounted for that. So JP Morgan put out a report, I don't know, a month and change ago, where they say, like, look, once we really figure out what the new numbers will look like, once that business is kind of off the books, there's some decent earnings growth ahead. And decent earnings growth for Kimberly means like 3 to 6%, not 15 or 20%. But they've got a price target of $144 on it. Stock's at, what, 122 right now. And I think in this environment, if there is wind that comes out of the overall market sales, if there is wind that comes out of the AI froth-driven area, this is where I want to be. A 4.2% yield, 16.5 times earnings, steady earnings growth ahead, maybe some upside as the analyst earnings revisions are revised up. Maybe there could be a little bit of multiple expansion. If the market does crack up a bit, this would be an obvious flight to safety recipient. So, yeah, not exciting, but solid.
I mean, right? Making money is exciting.
Are they building data centers?
Yeah, it's a pretty boring version of exciting.
All right. Hey, to each his own.